Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening of Thursday, the 18th of August, 2022. Time right now, 7:05 p.m. Central Time. So tomorrow we have a lot of options expiring in the financial markets. No real economic data, U.S. data coming out on the marketplace, but we do get next week the Jackson Hole Symposium. That's the Fed meeting that goes on where the central bankers show up. That is where the fireworks are likely to start coming from as we get to different points of view and clarity in this last set of Fed minutes. Now, I don't think that I'm confused with what the Fed is doing. The Fed is being very clear. They're going to go after interest rates, raising them till they get ahead of inflation. The big question is inflation going to fall quicker rather than slower? Number two, will it get sticky in an area? And number three, what will the Fed do to not only watch that, but to beat it? 75 basis point hike, 50 basis point hike, probably September. After that, data dependent, don't know where we're at. That gives us the chance to see a lot of CPI numbers. But when I look at the metal markets, they're sort of yawning. The market that came alive today was copper. Copper had over a 10-cent range, and it's almost like once it got into the mid-350s, it just said, no, I'm not staying down here. And like that, it came right back. You're sort of drifting in the energy markets. We're still waiting to see, does the U.S. and Iran form any type of deal at all to bring Iranian oil back on the market, or is that gone? Because, first of all, when people say, well, this is it, if it's not done now, that's a bunch of nonsense. It just goes on and on until they either reach a deal, don't reach a deal, and they keep coming back. But each month that goes by, Iran is getting closer and closer to uranium enrichment. They're telling the U.S. and the EU, hey, this is what we want if you want us back into the deal. And why shouldn't they play rough? They have the capacity to give you 2 million barrels of oil a day. You heard me. They have that. They can do it. Certain amount of it's going out on the market anyways, but there's quite a bit that's left there. At one point, they were up to 4 million, but they need a lot more infrastructure and money thrown at them. However, do they want that, or do they want the nuclear ability to wipe out Israel? And tell the rest of the world, because everybody's watching Russia. And Putin's taught Iran, other countries, just get your weapon, put your finger out and say, if you mess with me, I'm pushing it. And everybody backs off because Armageddon. You just don't know what will happen. That's really, people don't say it. That's what's going on. Do you think that there's not enough force out of NATO, the United States, if they want to drive Russia right out of Ukraine, that they can't do it? They can do it in a heartbeat. It's that finger. And that's keeping everybody at bay right now. And so what do you think happens if Iran gets the weapon? That's my point. No more than that. All right. In the gold, we're down 2.5% or so for the week so far. The market's broken down. This rally labored itself up and it stopped at a key resistance point. And the market is now breaking down rather hard, actually. It got under the 18-week average of closes. That means on rallies, resistance should be in the neighborhood of, say, the 1789 level. And if it can extend the break, maybe it gets towards the lower Bollinger Band in that 1750 zone. I say maybe. It's already oversold. It would have gone from the upper Bollinger Band to the lower to get there. That's a trick in itself, but it does happen. I don't know. I'm not seeing anything here that I like. And to go short, this is how I'm looking at it, where would you put a stop? So let's assume you sold the market at 1789. Do you really want to put a stop at 18, 19, 20? I don't. I think I'm walking away from that. The gold-silver ratio spiking to the upside, which means silver's in trouble. And here comes silver to the downside. It's literally fallen apart here. It's from 2087, it's come straight down to $1.50. Boom. In 5 days, just like that. Oversold as can be. Maybe it gets to the lower Bollinger Band. More likely, going to give you a bounce somewhere along the line of fight at the 18-day average of closes. Now, the copper market corrected from the upper Bollinger Band and certainly found its footing here at that 18-day average of closes. Momentum-wise, the market is staying in overbought territory. It's a confusing chart. Not an easy play. First off, I teach you never buy an overbought condition. I can see how the market corrected. It lost its embedded rating. You see that right here. That called for a break to the 18-day average of closes. And let's see if I can get this to do it, because I think you'll get a kick out of learning this. Yeah, I'm going to be able to do it. So here we go. Here you lose your embedded reading. When you lose it, what I teach in my enhanced Bollinger Band course, and you can see that on our website, by the way, at iraepstein.com under the word education. When you lose that, the odds are very strong. The price and the 18-day average are going to come together in short order. Here's the market. Now this is Wednesday. This is yesterday. You tell me what it did today. Went right to that number, held it, and that's what you've done. You don't think that's worth something to help your trading? Maybe you don't. For me, it's a miracle. I discovered this, and once I've started applying it to what I do with my client recommendations and so on, it's really helped tremendously. I wouldn't look at a chart without understanding it the way that I teach it. In the platinum, same thing. You lost the embedded reading. Prices came down. The goal was the 18-day average of closes. When did you hit it first? Well, if we took a look at it right here, today, you know, that's all I was looking for. In the palladium market, embedded reading, you lost it when you dropped back under here. You went right to the 18-day average you're sitting. And no, I'm not telling you I'm bullish or bearish here. I'm nothing right here. I've got my hands in my pocket doing nothing. I'll give you another market that's difficult. Look at the dollar. You went from the lower band to the upper band. I have those bands big and bold for a reason. 95% of the time you'll trade within them. So I think you're whipping around, marking time in front of option expiration tomorrow in a number of stocks and different parts of the financial arena, and then next week the FOMC meeting. So I pay attention to that, and I realize what the markets want to do. The market has come up. This market is saying that what's happened, the dollar's saying that the stock traders have it wrong, that the Fed's going to keep raising rates, and that's why you're going up in the dollar at this point in time. That's how I'm going to view that. You know, as you know, we put together a whole slew of information for you and a lot of free offers. Just take your cursor, follow my finger, move it to the very top up here. It'll take you right to our free offers. Sign up for what you want. You can get my services, charts of the day. There's all kinds of information. Take advantage of it. I'm Ira Epstein. I'll see you tomorrow.